What did I say? Let's talk about it. Hello everybody, Joe Werber coming at you. And if you caught my video last week, before the election, I said, look everybody, we're gonna get through this. Everything is gonna be okay, no matter which party wins the White House. What was most important was that we had a clear winner on election night, and that happened, and the markets were very, very pleased about it. We saw the very next day, we saw the Dow Jones have one of its largest days in history, almost 3.7% gain in a single day. The S&P 500, the NASDAQ made over 2%. That was an incredible statement, not necessarily about who won, but a statement that the markets wanted some certainty. They wanted closure. They did not want to see what happened last time happened again. They just wanted a path forward, and they got it. Now, I also want to say that I'm very happy that not only did we have an incredible uprise in the stock market the day after the election, the following day it didn't tank. It didn't lose any of those gains. And that says a lot about how strong this economy is. And I know you don't understand right now, but the actual S&P 500 is still undervalued. We're about 18% lower in our price to earnings ratio than we were 4 years ago due to those extremely high profits that we've seen. And while every single indice is at an all-time high, we still have some growth yet to be seen. Now, there are a lot of people saying that it was because of Trump, and that could be. That could be that people, the economy, the stock market likes the idea of a Trump presidency more than a Harris presidency. I'm not the expert on that. All I know is we have a president, the stock markets are happy, and this should be a lesson. You should take something away from this. You should realize that timing the market is not the thing to be doing. We saw an incredible increase in cash into money market accounts the weeks prior to the election, and that was people's fear. That was people allowing the news to get to them. That was people allowing the world events to cloud their judgment as to what was going on. And I told you what was going on. The economy is strong. Profits are at an all-time high. We have strong demographics. This country is going to move forward. This economy is going to move forward regardless of who's sitting in the White House. So that lesson should be, keep your money in the stock market. Have a strong plan. Have a good advisor, somebody who's looking out for you and somebody who's going to take you through these ups and downs. I saw a brilliant video. A man went back and he looked at if you invested $10,000 in the S&P 500 back in 1950 and you only kept it in during Republican presidential terms, your 10,000 would have grown to about 2 million. Then he said, what if you would have kept it in during Democratic terms? And that 10,000 would have grown to about 3 or 4 million. But that's not the point. The point is, what if you simply would have kept it in the stock market the entire time? And that $10,000 would have grown to over $30 million. So you would have lost out on 10 times the returns because you were worried, you were scared. Again, hire a quality advisor. Have somebody out there watching your back, giving you this advice. That's why you tune in every single week when I have these, well, not every single week because I've been behind, but that's why you tune in to get the advice, not what's going on with what's on the news, but you tune in to hear what's actually happening behind the scenes. Now, on top of the election this week, we also had a Fed meeting, and Jerome Powell decided to lower rates 0.25%, which is exactly what the stock market expected. And we saw basically the Dow Jones was flat. We saw that the S&P gained about 0.75%. The NASDAQ gained about 1.5%. That tells you the markets expected the 0.25% drop, and they got it. At the Fed meeting, he said we expect to see another 0.25% rate cut in December, and maybe a total of 4 rate cuts next year in 2025 for another 1% decrease in the Fed funds rate. But what's interesting, and what a lot of you are probably saying is, well, Joe, he's cutting rates, but we're not seeing mortgage rates decline. And that's because mortgage rates are based off of the 10-year Treasury, and what Powell's doing isn't affecting the 10-year Treasury. The 10-year Treasury is more affected by economic situations. And now that we have what the economy and the stock market thinks is a president who will drive the economy forward, we're seeing the 10-year Treasury rise, which is putting pressure on banks to keep mortgages high. Now, banks could lower rates, and frankly, I think they're just being greedy, but it's going to take more cuts from the Fed to start pulling that 10-year rate down, to start actually seeing decreases in the 30-year mortgage interest rate environment. Now, you are starting to see money market accounts fall. You are starting to see CDs come below 5%, but it's going to be a little bit until we actually feel some relief in our wallet due to the Fed's cuts. Now, you'll notice I'm not in Pennsylvania, nor am I in Arizona. I'm actually just south of Monterey, California, in Big Sur this week. And this brings back memories. For those of you who know my past, I spent 4 years in the U.S. Army from 1994 to 1998. But the beginning of those 4 years was spent right here in California at the Defense Language Institute up in Monterey, California. And just being here 30 years later, it's really bringing back not only memories of the past, but realizations that when I was here, I was a kid. I was 18 years old. I had no idea what the future was going to hold. But what I decided to do was join the military. And multiple reasons why I joined the military. They had the best language school in the world, but it was also because of my family history. Most of my relatives have spent time in service of this country. My father was in the Vietnam War. I had 2 uncles in the Vietnam War. I have my mother's side. Her maiden name is Custer, but it's actually, for those of you who know history, it's pronounced Custer to everybody else. And I have someone in my family in every single major conflict in the United States since the Revolutionary War, going back to General George Custer, or going back to General George Custer. And with Veterans Day coming up, I just want to say thank you to all my clients who served. Thank you to everybody watching this video who served. I want to say a heartfelt thank you, because the 4 years that I gave to this country are 4 of the best years of my entire life. And I'm happy I was able to do it. I was a kid. I didn't know what I was doing, but I made the right decision. And those of you who are currently serving, those of you who have served, again, coming up on Veterans Day weekend, thank you very much for your service. It's people like you who will allow us to continue to have the freedoms that we have today. So the takeaway, invest for the long term. Don't try to time the market. Make sure you're dollar cost averaging if you are still young and putting money in the stock market. And if you're older and you're looking for retirement, make sure you build a plan way ahead of advance of any of these crazy events happening, and then you don't have to worry about it. Just trust the plan, stick to the plan, and things should work out. If you like videos like this, make sure you subscribe, leave a comment down below, and as always, I'll see you next week.